What's up, everybody? Nate here. So it's no secret that our markets and our economy have been on a downward spiral since the start of 2022. I'm talking the stock market, I'm talking the cryptocurrency market, and the housing market. All of these markets that set record highs back in 2020 and in 2021 have slowly depleted all of their gains. Now, many investors were hopeful that all of these problems were going to eventually disappear once the war between Russia and Ukraine got a little bit better or disappeared itself, and all of our supply chain issues also improved all throughout the world. But there is a lot more going on here than just those two factors. Federal Reserve Chairman Jerome Powell recently finished up his 2-day meeting with Congress where he talked all about inflation and our economy. And the key thing to take away from this meeting is that he said the Federal Reserve is not really going to be able to keep our economy and country out of a recession in 2022, that it's going to be extremely difficult. So with a recession looming over our economy right now, many experts and investors are worried that a great reset is about to hit all of our markets, basically flipping everything on its side, and that could fundamentally change everything we know about our economy and our money. So today I want to talk about what this great reset actually means, what's causing it, and what Jerome Powell just said about inflation and our economy. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. Now I want to start with Jerome Powell. So like I said, he was in Congress over the last 2 days and he was talking about our economy and inflation and some of the things that the Federal Reserve can do in order to lower inflation and get our economy back on track. Now, he basically said that this is going to be very difficult, that the tools that the Federal Reserve has are very limited. He continues to talk about the war between Russia and Ukraine and our supply chain problems. And the fact of the matter is the Federal Reserve and the United States federal government just simply does not have a lot of power over those two things. This worries Jerome Powell as they continue to raise their interest rates. Now, the Federal Reserve and Jerome Powell essentially saying that a recession is probable in 2022 or in 2023 is very important, and we'll get into why that's important a little bit later. But what you need to understand right now is that the Federal Reserve kind of has its hands tied when it comes to its monetary policy. You see, over the last 2 years, they pumped so much money into our economy, they drove up demand so high by lowering their benchmark interest rates that people went out and spent pretty much beyond their fundamentals. And that got so high that all of our markets started to go way up. Investors started to get greedy and risky. They started to pour as much money as they could into markets because everything was going way up. Basically, you couldn't lose. You were betting with Uncle Sam's money, so even if you happened to lose, well, you didn't lose any of your money. You lost the United States government's money. So that was one major factor that kind of made our entire economy start to go way up. Like I said at the beginning of this video, though, everything is coming way down. So what exactly changed? Well, the Federal Reserve is now starting to battle inflation. They are battling inflation more aggressively than they ever have in American history, which means raising their interest rates, bringing down demand. So they want to essentially bring down demand so much that it's restricted all throughout our economy. Jerome Powell said that they want to bring it down to a reasonably restrictive level. So that means that people can still spend money, but it's going to be very difficult to do so. And we're starting to see that all throughout markets all throughout the country. The housing market is one of the key markets that we can see this in because mortgage interest rates for a 30-year fixed mortgage are going way up and they're way passing 6%, and they're probably going to be closer to around 7 and 8% by the end of this year. That means Americans are spending hundreds of additional dollars for a mortgage if they're buying a house right now, and many Americans simply can't afford that, so they're immediately priced out of the housing market. They can't get a house, and if there's not as many buyers, then, well, that kind of makes the supply and demand issue hit an equilibrium. So if demand starts to come down, supply can start to rise because, well, there's just not as many buyers and people are still trying to sell their house. We're also starting to see a similar thing all through throughout the stock market and, of course, in the cryptocurrency market. So the stock market has been crashing all of this year, and it's mainly because of the Federal Reserve and their interest rate policies. The Fed has been getting super aggressive, and the federal funds rate, which is their interest rate benchmark, is now at around 1.5 to around 1.75. In fact, they raised their interest rates last week more aggressively than they have since 1994, and they're going to continue to do this as per Jerome Powell because inflation is so bad right now. What you need to understand about the Federal Reserve and our economy is the Fed right now wants to bring down inflation, and they're willing to risk a shallow recession in order to get inflation down. If inflation continues to go higher, then the value of our money continues to get lower, and people need a whole lot more, and that is a rotating problem because then the Federal Reserve needs to print more money, and as they print more money, well, and there's more money in circulation, people have more money to spend, the value of the dollars continue to go down. That is a serious problem for the future of our economy, so they need to get that under control right now. But in addition, they also have to control prices all throughout the economy, because if they don't, then Americans simply won't have enough money in order to buy things, and that means businesses eventually suffer. They are willing to risk that because they want to get our economy back on track, and getting it back on track would mean something called the Great Reset. The Great Reset essentially means that all of the gains that we have seen in the stock market, the housing market, the cryptocurrency market, basically reset. All the things that went really high over the last 2 years are now starting to crash back down, almost like they never went up in the first place. One of the biggest reasons why is because of the Federal Reserve. Now, as they suck that demand out of our economy, people naturally spend a whole lot less money, but that doesn't fix anything right away because we also have those really big supply chain issues and also the war between Russia and Ukraine. So with all three of those things, the Fed sucking out demand, supply chain issues, and the war, Americans are just not going to have enough things to buy, and of course they're not going to have as much money. All of that stimulus and all of those low interest rates in 2020 and in 2021 meant that businesses had so much capital. They could go out and spend so much money getting employees, buying stakes in other companies. They were investing heavily. They were also investing heavily in themselves, so they were growing at a super fast rate. But now in 2022, they simply can't do that. So wages are having a really hard time growing, which means people can't afford to get things, which means businesses themselves can't grow like they did in 2021. And with all of that liquidity exiting the stock market and nothing more coming in from the Federal Reserve, well, all of these businesses have to make bets that are going to be safe for them. And that means not building up other companies, and that means maybe not investing in themselves, really only putting that money away into a protective emergency savings. Jerome Powell also basically admitted that while the Federal Reserve can do a lot for demand in our economy, they simply cannot do much when it comes to food and energy prices. And the fact of the matter is that is what most Americans spend the most amount of money on every single month, is food and energy. So with those prices continuing to go up and Americans having to put more money towards them, they're not going to have money for other things. Businesses are once again going to get hit, which means unemployment could start to rise in the United States. So once again, you're back to square one. Unemployment could start to go up in the US. The stock market has basically erased all of its gains and is back into a bear market. The housing market is starting to come down in price because interest rates are starting to go back up. Everything is resetting. So with all of that being said, what exactly does this mean for our economy in the future? Well, during this two-day meeting with Congress, Powell did say that the Fed was dedicated to lowering inflation and getting our economy back on track in 2022. In doing that, there might end up being some casualties along the way, including a possible recession in the United States. Now, I mentioned a recession before, but it's really important to know that Powell believes that it's going to be very difficult to avoid one in 2022. Basically, a recession means a reset in general, because the factors that create a recession mean that things that were happening before were very over the top. Basically, look at what happened over the last 2 years. In 2020 and in 2021, everything was going up. Investors were getting risky. They were starting to pour their money into companies that were most likely unproven and weren't really making a profit. A lot of tech companies and other businesses were gaining equity in these companies as well because they were starting to go up, which means those companies could sell that stock and get a whole lot more liquidity for their own business. In addition, you had people putting their money behind other assets like the housing market and of course the cryptocurrency market. Basically, people were spending. They were spending so much though that everything was getting pushed way to the top. Things that probably shouldn't have been there in the first place. A recession and a crash or a correction means that all of those bad assets that shouldn't have been there in the first place are now starting to disappear. They simply can't survive. There is just way too much in our economy right now, and the money needs somewhere to go. It's going to find places that are really good. It's going to find places for investors that continue to make them money and are a whole lot less risky. It's unfortunate, but with this reset, we're probably going to see a lot of businesses that started over the last decade or so, and more importantly over the last 2 years, probably disappear by the end of this year or by the end of 2023. Whether they just go into bankruptcy or they're swallowed up by a bigger company, they just won't be around anymore. Like I said, a lot of these companies that are unprofitable means that they have no way to really make money other than from debt. And debt is hard to come by because the Fed is raising interest rates and they can't get any money from other investors or from other businesses because those businesses are really strapped for cash too. They are going to disappear, and all of those jobs that have been created are also going to disappear. You're going to go from a period where people can spend money on pretty much anything and everything is available to a time where basically investors have to be very careful and there's not going to be as much money floating around in our economy. That is really the only way that the Federal Reserve can bring down inflation at this point. Of course, the Federal Reserve does not intend to cause a recession in 2022 or in 2023. They want to raise their interest rates just enough to be aggressive to bring down inflation, but not enough to bring down demand in our economy way too much so people can't spend any money. Like I said, they want it to be reasonable. They want people to be able to spend, but it's a really fine line, and the Federal Reserve has pretty much been wrong about inflation in our economy up to this point. So it's not super promising that they're going to be able to deliver a soft landing, which would be raising interest rates without sending us into a recession in 2022. They probably wouldn't have to be as aggressive if all of the factors overseas weren't a factor at all. Like if China didn't have its lockdowns and the war between Russia and Ukraine wasn't causing gas prices and energy prices to spiral out of control in our economy. That's not necessarily their fault. They're now trying to do what they can, but in reality, they probably should have started a long time ago. Many experts and investors agree that the Federal Reserve had their easy money policies in place for far too long in our economy, printing too much money, kind of supporting this riskiness and this greediness by Wall Street and investors for far too long. Now it's all crashing down. So what exactly does that mean for the future? Well, you're now going to have a period in the United States where businesses are not growing as fast as they were over the last 2 years. There just simply isn't enough money and they can't really be risky until inflation starts to come down. Once inflation starts to come down and the Federal Reserve has basically hit its peak of raising interest rates and its peak of pulling its stimulus, well then Americans can start spending again. They can start going out and buying the things that they couldn't before because interest rates are starting to come back down at that point. That can mean a whole lot more money is circulating and businesses can start to grow again, but we are nowhere near that just yet. On the last CPI report, which basically measures inflation on a month-to-month basis, taking into account a basket of all of the prices of our goods and services in the economy, well, inflation was around 8.6% year over year, an over 40-year high. It's going to be very difficult to bring that down unless the Fed gets super aggressive very quickly. Meanwhile, Americans are not making that much more in their wages. Businesses are not spending like they were. And of course, unemployment is starting to rise because layoffs and firings are starting to happen. Now, I want to add a little bit of optimism to all of this. So everything goes way up just before a recession, and then it comes way back down because all of those records simply cannot last forever. ever. But what we need to understand about our economy is our markets and our economy go through this every so often. This happens because you have to kind of ride the line between overspending and over-circulating with inflation and causing an outright recession where everything is restricted in spending. That is kind of one of the cons to capitalism, is you simply can't have everything all at once or else you're going to have some problems later on. Our United States Federal Reserve and our government constantly has to find the line between overproducing and underproducing. And if you can't find that, then you're going to eventually reach a recession. Crashes happen all the time, and so do recessions. Now, this recession is going to feel a whole lot different because our entire economy has been going so far up for so long. Over the last 2 years, our GDP has grown. Businesses have grown faster than they ever have. We've seen more businesses launch on the New York Stock Exchange. People are making a whole lot more money. And of course, IPOs have come out of nowhere. New markets have come out of nowhere, like the cryptocurrency market. All of this has grown, and it's going to be very depleting for a lot of Americans because a lot of that is going to disappear. But the comforting thing for you to know is that if these assets are good, if a lot of these markets that were created and a lot of these businesses that started over the last 2 years are really solid in the first place, then they are going to go down right now. But I can almost guarantee you that eventually they're going to go right back up. And chances are in 10, 20 years or so, they're going to go back down. But if they're good then too, then they'll go right back up. Good businesses that make good products and have good fundamentals stay around for the long haul. That's why some of the businesses that are trading on the New York Stock Exchange have been around for hundreds of years. They make good products, they make good money, so there's no reason for them to go anywhere. This is just another crash that we've seen before. And the reset offers an opportunity for new investors to enter the market as well. Maybe the market was overvalued, so you didn't want to buy, whether it was cryptocurrency or the stock market or in the housing market, but now everything is resetting, so many more investors are going to have the opportunity to buy all of these good assets that remain at a discount, and that creates wealth for a very long time. And if the market continues to go down, and you can hold on to those assets for a very long time and build a ton of wealth without spending all that much money. That's why they say more millionaires are made during recessions than any other time in history, because the ones that are able to capitalize on those opportunities now are the ones that end up becoming the most wealthy down the road. And that is something that can happen for any investor right now. But now I want to hear from you on this issue. What do you think about this great reset happening in 2022? Do you think that there's any way that the Federal Reserve can help us to avoid a recession, or do you think that the recession is coming and it's going to cause everything to flip on its side for the foreseeable future? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.